All right. So, a lot of questions being asked today that why the market reversed as we got this CPI data 8.3 versus 8.1 expected. The market started going down at 5:30 a.m. Pacific time, or just about 1 hour before the market opened. So the future for the S&P was at 3490. So that's where the S&P started at 6:35 Pacific. 5 minutes after the market opened, the S&P was at 3491. So since then, there was this, it's around like 3 to 4 minutes. It stayed between 3491 and 3496. Then it started going up. Soon, the short covering started to happen. And the market, and very soon, within 7 o'clock, we saw the S&P is at 3,500 level, 3530. But within an hour, around 8, it was above 3600, 3630. So you have to really roll your eyes to see that what exactly happened. The market, everybody expected when the CPI report came out that the market is going to really not like it, and we are going to see a real sharp drop in the market, and that exactly happened. But then the market really started buying into buying mode, and it went all the way up, and the market closed. It didn't even actually flinch. Um, Usually, what that happens when you have such a big day like this, where around 8%, 5% move from the low to the high at the close. So usually you'd see some profit taking, and you will not expect that the market will stay at the high at the low, at the close. So market closed at 3669 today, which was really impressive. So the question is why that level of 3491, from there market bounced. So obviously, as the market went to below, broke the 3,500 level, it did not spend any time in 3,500. If you think about like what happened last Friday, on it was when the market broke below, I believe it was September 30th, when the market broke below 3,600 for the first time, which was 3,590. That's where the 3,589. That's where the market bounced on September 30th. Then we had a very good 2 days on October 1st and October 3rd and October 4th. The first 2 days of the trading in October, when we went all the way up to 3,800 level. And then we got this high, two-year again started jumping again, and we started selling off, and we realized that we are just overbought condition a bit in the first couple of days. Wednesday, Thursday, really bad, and then Friday we have this semiconductor news came up that AMD was in a had a $1 billion miss in the revenue for the consumer space, and then also we had more hawkish tone from the Fed. Altogether, we started seeing the market go down, and last Friday we were at 3.5 again, broke and tested that 3,600 level around 3,589. We broke that. This week we were waiting for the CPI data. We broke that 3,585, and yesterday we were at the year low around 3,570, around that level. I think 3,577. So last 4 or 5 days, once we broke the 3,600, we're just around the lowest. We went to around 3,570. So not a lot of time spent in 3,500. There's not a lot of support or resistance around that line. So today, after the CPI report came, the market went straight line down straight to 3,496, breaking through the 3,500. And guess what? At 3,495, we have a 0.38 strong Fibonacci support. And this is why I opened this chart here to show that on SPR, this is the SPX chart. This is actually SPY. So let me open the SPX. that will show you the Fibonacci levels. So 3505 is a 50% Fibonacci. That is considering the tip of 4818. That was a January peak, and 2192, which was the COVID low. And if you consider the 50% retracement, we are at 3505. That is the number, that is the level. And we just broke below that. We spent about 10 minutes around that area, around 34991 to 3496. And then we broke straight, bounced back from here and back into 3800, 3600 level. At the 3644, 3636 was the previous low for the year before we broke through that in September. But 3644, around that area, the S&P is spending a whole lot of time. So no wonder that that is a psychological safe place for the market, for the SPX, and it wants to go there whenever it wants to find comfort, both at the bear side as well as the bull side. The market tends to be attracted to that level of 3644 and started to kind of rest around there. And once it finds enough bull, it goes slightly up or below that, right, when there's a bear pressure is higher. But in the end, the equilibrium seems to be at least around this time at 3644. So today we spent a lot of time again after this bounce around 3644 before, and then towards the close the market again started getting bought, and 3669 where we closed. It's an impressive day today. I haven't seen, I cannot remember this kind of swing that when the market on a single day, by the way, since last Thursday, since that AMD news, when the whole S&P sector went down, the SOC sector went down, taking the S&P down. Since then, we had 8% move from 3,800 to 36 today to 3491. So around 8% move in the S&P in really 5 or 6 trading session. And today itself, in about like 5-6 hours of trading sessions, from 6:30 in the morning in the Pacific time to about 12 o'clock in the afternoon, we got around 5% move. This is extraordinary stuff in S&P. 5% move would be one good enough day, good enough year for S&P. But today we just moved that much just in one day. So this is why the VIX is so high. This is why we're looking at around 35, 36. But the positioning, the short selling is how any rally starts. As we went to 3,400, it was good enough for a lot of shorts. And as we were kind of settling for 4-5 minutes at the 3496 level, the shorts were waiting and they were happy because they made profit. The new guys, the buyers, were happy because they're getting a great valuation. So that's where we hit the right sweet spot. And as soon as the buyers, we start moving up a little bit, that would trigger the panic on the seller side, on the short whoever has the short positions, they would try to get profit, try to make sure that they take the profit. Otherwise, nobody knows that where's the bottom, and where we are heading from here. So as soon as they took the profit, the things move higher, and that the position piled on. So that's kind of the the situation today, and I think we are probably going to give back some of these gains tomorrow. We are right here, and if you look at the QQQ, and the other tech ETFs. So QQQ right now we are in this channel. If you look at the one hour chart, so for last several months since August 15th, we are actually operating in this channel, and this is the mid channel. So we just broke through the mid channel today, all the way from bottom to up. And if the momentum continues, we'll probably hit a resistance around 277 in the next couple of days, or maybe the next week, or we'd probably get some support at 261 level if we kind of give back some of these profits today. If you look at the SQQQ, which is a short, which kind of short of the QQQ, which is the technology NASDAQ stocks, you can see that we this is going up means that the QQQ will be sold off. So this is a short QQQ. So here again in the hourly chart, you can see that we hit this resistance here around 69, which was a previous high for this short back in June 6th. And then we again gave back this short QQQ went back here. It closed today at 59. So there's a way to go. So if it this is the trend line it's been following since August. So if we believe that QQQ will go up a little bit, as we saw in the previous chart, then this is the, so if it goes back to 267 for the QQQ, 53, so there's a 59 to 53, there's a good 10%. We could see there's a up movement is possible in QQQ. So overall, I think this is a great setup for the next few weeks, at least I think end of the October, where we could see that the QQQ either the technology stocks either settle around here, so it might have a just kind of consolidate around here until the Apple earning on November 3rd, or we could see it'll go up the next few days and then come down again after the Apple earnings. So the next couple of weeks would be good for technology. I'm not playing any long trades at this point. We're just holding a bunch of positions, and hopefully I'll get a chance to sell around that area around last week of October. But I think the better option right now to sell out of the money calls and out of the money puts in the next few weeks in the ETFs, the XLFs and the XLI, maybe even for XLK. Yeah, so I'll be closely watching this. All right.